Amazon.com Incorporated was founded by Jeff Bezos in 1994 in the state of Washington. Amazon originally started as an online bookstore but has grown to become the world's largest online retailer. Amazon expanded sales in many categories such as electronics, including DVDs, CDs, MP3 downloads, software, and video games. Aside from all electronics, Amazon also features in clothing apparel, furniture, toys, food, and much more. Amazon.com was started during the Internet Revolution and faced a slow growth, unfortunately, that caused them not to have the ability to make profit in the first 5 years of business. Now, Amazon.com is a billion-dollar company that has made over $48 billion in sales just in 2011 alone. With customer service centers, software development locations, and offices located across the globe, Amazon.com is a popular third-party internet website that helps sellers sell their products for a small incentive. Amazon.com also charges different businesses to advertise on their website. In addition, Amazon is known for their manufacturing and selling of their reading tablets such as the Kindle e-reader and computer tablets such as the Kindle Fire. One of their newest products was the release of the Kindle Fire HD, which is priced at $199. The Kindle Fire HD is marketed as the world's most advanced tablet because of its wide variety of social media, dual band, dual antenna Wi-Fi, great anti-glare, clear picture, and high definition front camera view. According to the Yahoo Finance website, Amazon.com stock prices are steadily increasing, currently at $232.84 per share, and have been pretty successful this year. After reading Part 1, Item 1 in the business section, the reader will be informed of the brief history of Amazon.com and their main logistics of the actual company. The main logistics discussed are the information about their common stock, which is a type of ownership in the company, and their symbol, AMCN. This helps investors identify Amazon and is the first step for proposing reasons to invest in their company. Amazon.com has had rapid growth and is evolving and has created a wider range of competitors for them. Since Amazon has a large variety of products they sell, their competition is in many fields and different businesses. Amazon has to compete with physical retailers such as Walmart, technology companies such as Apple, and bookstores such as the declining Barnes & Noble. For example, according to the CNN website, Apple is ranked number 1 in the technology field and is worth more than $500 billion as of February 29, 2012. The best way to stay in business with a big competitor like Apple is to keep prices lower on their products but high efficient. Amazon has been one of the main companies that single-handedly took out the Barnes & Noble bookstores because of their low prices, shipment to customers' houses, and the ebooks, making reading and saving page numbers easier. The information about competitors is very important to Amazon because it helps measure their success as a company, budget their spending on research and advertising, and also be able to make conscious promotional and pricing decisions. This is why Amazon.com has become a successful company and will continue this day.
From the standpoint of either a shareholder or a company employee, one financial statement of Amazon.com is of great importance. This is the Consolidated Statements of Operations. This reports the company's net income each year on December 31st. This year-end total shows the excess of total revenues over the annual total expenses. All companies strive to show an increasing net income amount each year because that states that a profit has exceeded the expenses that are incurred. In 2008, Amazon.com reported a net income of $645 million. 2 years later, they had increased this total to $1.15 billion at the end of 2010. This is approaching a 200% increase in net income. When reviewing the Consolidated Statements of Operations, the operating expenses account is divided up into many different categories. These include cost of sales, fulfillment, marketing, and technology, to name a few. However, one expense item is on average 4 times larger than all the other operating expenses combined. This is cost of sales. During this semester, we have come to know this account as cost of goods sold, which is defined as the cost of Amazon.com's inventory sold to customers each year. Amazon states that their cost of sales mainly involves the purchase price of goods and services sold, but also the fees incurred from shipping and packaging. In 2008, Amazon had a cost of sales of nearly $15 billion and ended 2010 with $26.5 billion. When comparing Amazon.com to its competitors, eBay is one of the typical comparisons. But both were started around the same time and compete for the online product market. However, there are also certain differences. For instance, eBay employs about 28,000 people, whereas Amazon employs upwards of 70,000. When relating financial statements, there are both similarities in figures but also major differences. Net income for eBay the year end of 2010 was $1.8 billion, which is very comparable to Amazon. But on the other hand, total operating expenses were almost 6 times smaller with eBay, with a total of $4.5 billion. In conclusion, my research has found that Amazon.com has been gaining ground in the online market race. Its stable platform advantages in sale price, shipping, and feedback has shown that many families and businesses prefer what Amazon has to offer.
Amazon Inc.'s online prices has forced major retailers to cut their pricing so that they can stay competitive. To fight online competition, retailers are now matching their own online pricing. The spread of e-commerce means that retailers will now have to get used to flexible pricing. Some of the reasons that these major retailers are now struggling, major retailers like Best Buy, Target, Walmart, and Sam's Club, is because shoppers are going into the stores, checking out the product, and then going home and buying the products online. Amazon Inc. has even encouraged its shoppers to use the online pricing check app in its rivals' stores so that they can check to see if their prices are cheaper than the place that they are in the store shopping at. The end of the 2010 fiscal year was $18,797,000,000 for Amazon Inc. Amazon Inc. also owed $11,933,000,000 in total and current liabilities. Amazon Inc. stockholders own $6,864,000,000. The account equation for Amazon Inc. is 18.79 billion equals 11.933 billion plus 6.864 billion. Amazon Inc. had 3.44 billion at the beginning of the most recent year. Amazon Inc. had 3.77 billion at the end of the most recent year. Best Buy had similar numbers in 2010. They had 18.3 billion in assets equals 11.34 billion in total liabilities plus 6.964 in owner's equity. Since 2010, total assets has dropped by at least 11 billion per year for Best Buy. In 2011, total liabilities declined about 900,000. In 2012, the total liabilities increased by more than 1 billion. In 2011, owner's equity increased by only 330,000. 2012's shareholders' equity decreased from 7.2 billion to 4.3 billion owner's equity, which was a decrease by 40% in 1 year.